Hello guys, welcome back to the next video where we are solving question number 7, the OR question from the ISC Specimen Question Paper 2023. If you have missed out the previous videos, do check out the entire playlist from the description box below. And if you want to stay in touch and don't miss out any future videos, then hit the subscribe button and the bell icon. This is a sum on admission of a partner as well, where Shrey is the new partner who is being admitted for 1/3 share in the profits, the old PSR being 4:3. Nothing else is mentioned about the profit share. In that case, the remaining 2/3 after giving 1/3 to Shrey is shared between Karan and Vijay in their old ratio itself. So the sacrificing ratio also remains as 4:3. Okay, let's pick up the item as we go along. Like the first one that we have, the capitals of Karan and Vijay are 40,000 and 30,000 respectively. So very first entry would be buy balance BD 40,000 and 30,000. The second one that we have got, profit and loss account has a debit balance of 7,000. So that comes on the debit side. It's a loss. So it's distributed among the old partners in the old ratio. And this comes on the debit side to profit and loss account. Okay. So that will be distributed in the old ratio as well. 7,000. That means 4,000 and 3,000. Point number C is interesting. General reserve shows a balance of 21,000 which is not to be distributed. This is important point to be noted. Now, in this case, if you are seeing this kind of statement, then straight away you cannot go ahead and distribute the general reserve among the old partners in the old ratio. What we have to do is we have to take out the share of the new partner out of this general reserve. Shrey's share of reserve, which is 1/3 into firm's reserve, that comes to 1/3 into 21,000, that is 7,000. Okay, and again that will be given to the sacrificing partners in the sacrificing ratio. So that will be debited to shares current account. So that goes 7,000 here, and that will be distributed in the ratio 4:3 to Karan's capital to Vijay's capital. Okay, this is important to be kept in mind, otherwise you'll end up making mistakes. Let's go to the capital account and plot that. So that will be by Shrey's current account, 4,000 and 3,000 straight away. Now we do not know yet how much money the new partner is bringing in. So we are just making a provision for that. The fourth one, goodwill of the firm is valued at 42,000. Okay, again we have to calculate the new partner's share out of it straight away because it's already given 42,000. So 1/3 is his share. 1/3 of 42,000 is 14,000. That will be distributed among the sacrificing partners in the sacrificing ratio. And the question here says that the new partner is able to bring in the goodwill in cash. So straight away we can write buy premium for goodwill account. Okay, so that will be 8,000 and 6,000. All right, this one is done. Coming to the next one, point number E, the cash at bank is 15,000. We are required to prepare the bank account, and that goes here on the debit side as to balance BD 15,000. And the last one says Shrey brings in proportionate capital and his share of goodwill in cash. Okay, for that we need to do the calculation. So coming to here to the working notes, total adjusted capital of Karan and Vijay for 2/3 share. is how much? What all do we have? If we see here, we have 40,000 and 30,000. Then we have premium for goodwill and Shrey's current account, and here we have a debit which will be subtracted. So if you add this two and subtract, how much do you get? You get 48,000 here and you get 36,000 here. Okay, so let's do that. That will be 40,000 plus 30,000. Then you have 8,000 plus 6,000. And then you have 4,000 plus minus, well, let's do the plus first, plus 3,000. Then you have minus 4,000 and minus 3,000 for PL debit balance. So you're getting 48,000 plus 36,000, which is coming to 84,000. Okay. Now remember, this is two-third share. This 84,000 represents two-third share of capital. So in that case, you have to calculate total capital of the firm. That will be simply 84,000. You have to use unitary method here, multiplied by 3 by 2. Just the opposite. That will help you to get the correct figure, and which is coming to how much? 84,000 into 3 by 2. That gives you 1,26,000. Okay. So in that case, what will be Shrey's share of capital, which is one third into 1,26,000. So 1,26,000 into 1 by 3. 42,000 is the amount that Shrey is supposed to bring in. So we go up here in our capital account and we write here 42,000 in Shrey's column by bank. All right, all the entries are done straight away. Now we can go ahead and find the closing balances of all the partners. How much do we get? So that will be two balance CD, which is the balancing figure out here. So 48,000, 36,000 and 42,000. That becomes our balance CD. Let's complete our bank account. Then the premium for goodwill that is brought in, that goes here, which is by premium for goodwill, right? Which is 14,000 that was brought. And Shrey brought in his share of capital to Shrey's capital account, which is 42,000. There is no other cash or bank transaction. So our balance CD that we get out here is 71,000 itself. All right. So this completes the sum. If you have any questions, do let me know in the comments box below. And if you like it, if this was helpful in clearing your concepts, do hit the like button and do share with your friends. We'll catch you all in the next video with the next set of sums that we have. Thanks for watching.